I know.
So let's start off with Benzinga. Now, I assume everybody's heard of Benzinga on this show, but just in case, why don't you tell folks what you do, Jason?
So Benzinga, way back in the day, I was at University of Michigan. I was trading stocks. I was living on East University. I started reaching out to CEOs of small cap companies, asking questions. I'd go to Yahoo message boards, post the stuff that I learned. Many years later, I wanted to create a news service that empowers the average Joe with better information or information that hedge funds would get, but give it to the average Joe. And so Benzinga started that way. Over time, different variations take place. We're about 130 full-time people, and then about 40 probably contractors that are part-time in some capacity. So anywhere between like 140, 180. What we do is we try to give information to investors and readers in a quicker amount of time so they can take action on it. We don't have a bias on it. We like give the facts and then let people decide.
You're kind of like what Bloomberg was way back in the beginning, but you're a lot less expensive than Bloomberg, right?
Yeah. So like Benzinga.com, we're kind of like that. We give news, data. We also have newsletters like of all different stripes. There's a guy that has a community bank newsletter, picks an investment, holds it long term in 11 years. You're probably not going to believe me. He's never had a losing pick. I'm not trying to jinx him, but it's a very niche strategy. And to be honest, hedge funds trade those kind of things. And what we try to do is give it to the retail investor. This guy, that guy's Tim Melvin. But yes, and then we're building other tools. So like we, one of the things that we're working on, and you know, we're people are investing in stocks, but there's other asset classes. So gold is an asset class. You can buy physical gold within an IRA if you wanted to. And you have to have a certain amount of assets. There's permissions. It's not like super simple. And so we're trying, one thing that we do is we experiment. We say yes before no. And a lot of this stuff doesn't work. Some of the stuff does work. So one of the things that we did a little partnership was we put a widget on your site to help consumers find gold companies. They can read the reviews of them. They can buy the physical gold. They can go to MITechNews.com and go scroll down and see the gold content. We'll probably provide you gold content explaining how it works. This is not a get rich quick thing. Like this is not like a Bitcoin, we're gonna make money tomorrow. Gold is, you make arguments about gold, but a lot of people have gold as a diversified portfolio, and we're trying to make it available to the average person versus just buying the stock of like gold in the stock market. You can actually buy gold bars.
Ah,
So what have been the price fluctuations recently for gold? Is it up? Is it down? Has it been all over the place? Or and how does that tie into what the overall market is doing? What direction does gold move in reaction to, say, equities?
Yeah, so gold has had like some of the volatility that you've seen, you know, in the markets, but it's come back for sure. It's like, so it was low, but then when the markets fell, gold stayed pretty stable. We're at around like $1,900, whereas over like the last 5 years, it's near a high, like 2,100 was a high. So it's been relatively, you know, a safe asset in that regard. So when the markets fell, gold was a thing to, you know, go back to, you know, go to a safe investment. That's what gold is, like physical, right? Physical gold,
Sure, yeah.
bullion. But there's something else I was going to say about gold. I had another thing. Yeah. And so that's, you know, Matt, to that point, like, so Ben's like stock market, you know, a lot of us get sick of it when the market goes down. So we created this thing called Benzinga.com/alts. So ALTS, where we put all these different alternative investments. So if you wanted to invest in an apartment building, a little piece, you can invest $500, right? $1,000 in different companies. HomeAway is one of them, where you get a little piece of the rent royalties from a property or things like that. Gold is one, but that's like, it's diversifying. So you're not just stock market. And I don't think anyone should go all in on stuff like this. I think you piecemeal, you learn. Like I invested in a building in North Carolina, apartment building. My first time doing it. I put like, this was like 3 years ago. I put in $250. Like you were able to do that. And then, you know, I got paid back on that and I still keep getting paid on it. So then I put a little more, and this is, our Benzinga.com/alts, ALTS, to look for these kind of opportunities that are not just stock market related.
Hmm.
You
Well, it's very cool that you can invest that small an amount of money. That really puts it within the reach of virtually everybody.
Yeah, and one of the things that I messed up on, and I told you guys before we started the show, is I invested some money in some crypto stuff.
Hmm.
Well, as you know, crypto, a lot of bankruptcies. Yes, okay.
A lot of scandal. Yeah.
I was getting like 8% interest, and I was like, it's safe at night. The CEO is telling me it's as safe as JP Morgan or a traditional banking account. Well, turned out not so much. And so one of the things we created was, and I'm just, the alt is just like for alternative investments, but I don't know if you guys ever look up interest rates, like savings accounts, checking accounts, all that stuff. We
Oh,
created a thing called Benzinga. You should check this out after the show, but Benzinga.com/yield. And instead of just giving like the returns you can get, it gives the risk profile. So like we have, if you scroll down, it'll say like, okay, there's you can buy the iShare Mortgage REIT ETF. 17% return, but more risk, high risk. And then if you buy the 1-year treasury, you get 5.8%. That's the safest, And so we list from safest to most risky, and it's a filter, and it's pretty sweet. We made it because I couldn't find anywhere to go do this. I couldn't find anywhere to go look. I could find returns, but I couldn't find it where they say safest versus risky. And, like you can buy the stuff for 20% interest rates, but it's risk, and people need to disclose that. And I don't think it's fair that the average investor doesn't know if something's risky or not. And that's one of the things we're trying to change.